The Nigerian Exchange Limited has revealed its proposal to allow companies to list bonds denominated in dollars on the market, potentially expanding this later to include stocks in order to ease their access to hard currency. According to Temikpo, the Chief Executive Officer of the NGX, the program is aimed at companies operating from the special economic free trade zones and earning foreign dollars. Aside from listing and issuing foreign currency bonds, the boss stated that it is collaborating with the Securities and Exchange Commission to modify legislation so that some corporations can pay dividends in dollars. My guest, Tajudeen Olayinka, who is the Chief Executive Officer of Wyoming Capital and Partners, joins me now to explain this. Mr. Tajudeen, good morning, and thank you for your patience. Thank you for joining us. Thank you for waiting. As I interviewed the SG there, we needed to get into some nitty-gritty there. So let's get started. What does this really mean for those of us that really watch the market, and perhaps even those that want to enter, or perhaps for even those that don't understand? What does this proposal mean?
Okay, what the NGX is trying to do there is, you know, to somehow further deepen. You know, we already, the Nigerian capital market is internationalized. So what they are trying to do is to further deepen that internationalization of the Nigerian capital market, so that you know, it won't be when local companies want to issue foreign currency denominated securities that they have to go abroad or go to international capital market to do that. They can do that right away from Nigeria, so that you know, those foreign investors that normally will you know, subscribe to those securities issuance in abroad, especially maybe in Europe or America, can also do so here in Nigeria. That doesn't mean that they have to be in Nigeria to be able to do that. They can still do the same remittance that they do to be able to participate in that market. So in a nutshell, what NGX is actually trying to do is to create a platform that that gives opportunity to some multinational companies in Nigeria, or those companies that operate in the international market by way of goods and services, so that they and of course, you know, these companies also earn you know, they earn foreign currencies. You know, they are involved in export. They earn foreign currencies, and in fact, they also commit their spendings in foreign currency. So they can actually issue foreign currency, for instance, US dollar denominated securities, you know, in Nigeria, whereas in the past they will have to go abroad to do that. So it's a way of further expanding the scope, you know, of what we call internationalization of the Nigerian capital market.
Okay, Mr. Olayinka, does that mean that if they are listed on the local bourse here, does that mean that they would also be trading in dollars? Because our currency is Nigeria, is the Nigerian naira. For example, some Nigerian companies are listed on the GSC, the Johannesburg Stock Exchange, as well as London Stock Exchange, for example, or if they want to list there. Yeah, isn't okay? MTN is also on the GSC. And are you telling me that with this proposal, for example, those companies will be listed and people will be buying those bonds or securities eventually in dollars?
Exactly. That is what it means. You know, once a security is denominated in the foreign currency, for instance, in dollars, in this case, I mean, in this instance, it means that those who want to take it off the existing holders of that securities will need to also price and trade that securities in dollars, so that it can settle. It will still go through the normal settlement system at the CSCS, but everything about that security will be dollar denominated. The beauty of this is that you know, when you say you are expecting diaspora remittances, it won't be just that diaspora remittances will come into Nigeria for purchase of goods and services. They can also our people abroad can also send money here to invest in the local economy, to participate in what is happening in the Nigerian capital market, to participate in trading activities at the secondary market level. So the essence is actually to expand the scope. And of course, don't forget also that that will also give opportunity to these listed companies to also be able to you know, do so many things that they normally like to do, you know, in dollars, so that they are not carried away with the exigencies of CBN does not have dollar or CBN has dollar. You know, there's short point here and there. They can meet their own.
I was coming to that, and how will that work? Because if they'll be trading in dollars or in foreign currencies here, wouldn't it filter into the scarcity of foreign exchange which we have here in Nigeria. I understand that in a bid to get internationalized, the NGX is coming up with different initiatives. But of course, if you're in Nigeria, you should trade in Nigerian currency.
Yeah, it doesn't stop you from trading Nigerian currency on other securities. But these ones that are denominated in dollars will be traded in dollars. The reason being that the company is actually doing business in dollars. For instance, those companies that are operating from the economic, all these special economic zones, like, what do you call? For instance, Dangote Refinery is going to be operating from that zone. There are other companies that will be operating from that zone. They do their transactions in dollars. They deal with other companies abroad. Let's even take the case of Dangote Cement, for instance. It's a local company, but it has investment all across Africa. So whatever it does with companies abroad, it can conveniently raise dollar locally and be able to do its transaction. But
now, wouldn't there be a risk, Mr. Tajudeen, and I hope I'll get the NGX on this eventually, wouldn't that be a risk of dollarization? Wouldn't that be a risk of capital flights? Because these are going to be companies listed or are in the special economic zones, and we know what happens, perhaps capital flight, when they make their dollars there, they take their dollars out, even for inputs or what have you. How will it now impact the local economy?
Now, the moment this company receives issue proceeds, that they're going to issue the securities in dollars. The moment they issue they release the proceeds, they are going to use it to operate their dollar-related transactions. And so, because they're also going to be paying back in dollars, they're not going to pay back in naira. They earn dollars, and so their earnings are reported in dollars. They can conveniently pay coupons or pay, in the case of a fixed income now, they can pay back those bonds in dollars. So there is no risk there. The risk is just at the doorstep of the company to be able to get dollars back for these investors. And that will be taken care of by through rating and several other measures that we put in place. There is no way you take dollars from investors and you want to pay back naira. No, you have to be able to pay back dollars to do so. So the risk of making dollars available would be at the doorstep of the issuers, not the subscriber, not the investors at this time. And then of course, it's going to benefit Nigeria more. For instance, these companies can also issue these dollar-denominated securities. For instance, if they issue bonds, they can do it at dollar interest rate.
Yeah, Mr. Olayinka, I'm trying to understand what you're saying, but you said that there are no risk. How about the risk of
I'm not saying there's no risk. Okay. There are risks.
Okay, about the naira losing value? Naira-denominated assets could also lose value. How about foreign exchange risk to that? Because even if, do you understand what I'm saying?
Yes, I'm following you.
Yes.
I said it earlier that these investors are going to get back their money from you in dollars. You are not going to pay them back in naira. The company that will be eligible for this kind of transaction will be those that actually earn dollars, those that trade in dollars, those that do their transactions in dollars and earn dollars. So the dollar exposure will not be there. At least, even if it's there, it will be minimal. If you earn dollars, you do transactions in dollars. Not your transaction is not limited to Nigeria. It cuts across the globe. And so once you earn your money in dollars, you can be able to pay back that dollars to those investors that have participated in your bond issuance. So the risk is just at the doorstep of the issuer. Now, for the economy, it's going to benefit them because that's also going to create dollar liquidity to the economy.
Okay.
The only difference in this one is that for in the past, when this company issued naira denominated their security, the dollars will come in and then they change to naira, they invest in naira. So this time around, it comes in that dollar and the issuer takes it in that dollar. So the issuer is responsible to pay back that money and does not need to go back to central bank to start looking for dollars to pay because it earns dollars.
Okay, Mr. Olayinka, I get what you're saying. Perhaps this is also an initiative by the NGX to bring in foreign portfolio investments, as it were. But we also know that foreign portfolio investments are also a bit volatile. But there are many questions we will ask concerning this. But I want to thank you very much for joining me this morning and your patience so far. Thank you for shedding light. We'll continue this conversation another day. The NGS has not started yet. It will commence soon, and let's see what happens. Thank you very much, Mr. Olayinka, for joining us, and have a lovely week.
Thank you for having me.
All right, I've been speaking with Tajudeen Olayinka, who is the Chief Executive Officer at Wyoming Capital and Partners. That's our episode today. Thank you all for joining us. Be the best you can be, and be the change that you want to see. I am Nancy Naji. Bye for now.